In this video, I'm going to go over my bookkeeping for all of my real estate properties in 2025. Now, my name is Eddie Cespedes. This is my $1 Million Diary, where I document my journey on going from zero to $1 million in net worth. And I've owned 4 rental properties, currently actually 3 because I moved back into 1. But I want to go over all the books and all my profits, my gains, my losses, everything from 2025, just so that if anybody ever sees this video, they can see what it's like to actually be a landlord, and they could probably learn from my mistakes, because I've made a lot of mistakes, and I've even have some mistakes that I could probably correct, but just because I'm hard-headed, I'm still going through it. So maybe somebody can get some kind of value from this video. Okay, so here we have the behind the scenes of what it's like to be a landlord. And it's kind of funny when people think that just because you own multiple properties that you're probably swimming in money. So maybe later on in life you will be, but in the beginning, or when you only have a few properties, sometimes it doesn't really work out that way. And here we got the 2025 annual dashboard. So as you guys can see right here in the profit loss column, we have a total of $90. My profit margin is 0.14%. I didn't even make 1% in in profit, which is kind of funny. So yeah, so it's kind of funny. So for all of 2025, I profited a total of $90, which is hilarious. Yeah, it's not really a whole lot of money, but if we break it down over here, in total income, so in total rents collected, I collected $63,940, and all of my expenses were $63,849. Now, here's the thing: for my expenses, at least for tax purposes, it's not going to show as if my expenses were 63,849, because for taxes, you don't get to write off the entire mortgage payment. You only get to write off the interest, you get to write off the insurance, and you get to write off the taxes. But the principal counts as income. So, but for me, when I create this spreadsheet, I add the total mortgage payment, because it gives me a more accurate view of my cash on cash return. So this reflects my bank account more than what my taxes would reflect. So if you guys can see here, in January, I made 60.45, so I collected 60.45. I spent 48.83. You see here 65.95, 52.50. And then the reason for all these different numbers is because a lot of times tenants tend to be late. In August, this is off. No, yeah, this looks about right. Never mind. And then I had some vacancies over here. So yeah, so the total was 63,940 what I collected. You guys can see it over here. By month, I profited 1161 here. Over here, minus 383, minus 434. This month, November, was big, minus $3,000. So towards the end of the year, I try to spend a good chunk of money trying to do some maintenance on the houses. The funny thing, so you don't have to be this way. Right? You don't have to be like this, because there's only one property that I have here, and that's the reason for why it shows that I only made $90. So I have one property that is just sucks all the money out of me, and I'm using the other properties to actually subsidize this one property, because all these big expenses here, like this month in November where I spent $3,076, it's all the same property. Like, I don't really have a whole lot of issues in my other properties as far as like maintenance. There might be I think I had like a water heater break last year, and that was like a $36 fix. I think it's like $37 fix. So yeah, like these maintenance stuff that I have on the other houses, if it wasn't for this one house, the house that I have in, I think that was like the third property that I bought. Yeah, that was the third property that I bought. If it wasn't for that property, actually my profit margins would be a whole lot better, because I think I have one property, right? So this property that's eating all my profits, the profit margin on that separate spreadsheet, it's like negative 33%, and then the profit margins on my other properties I think my best performing property, the profit margin is about like 40%. I think it's 40% or maybe like 30 something percent. And then I have another one that's like 13% from 14, something like that. I don't know. The other ones perform very well is what I'm trying to get at. And then this one performs at a negative 33%, and it just brings the total all the way down. So overall, 0.14. Let's see if I can break it down here a little more. So yeah, right here you can see in mortgage payments, I paid $48,671. So out of, we'll just call it 64. Out of those $64,000 in rents received, about 48,000 and a half were all mortgage payments. So at 76% of my expenses were mortgage payments, which leaves a nice little 24% gap. And now we look at all the other stuff, right? So in the mortgage payments, what's included is the interest, principal, uh, taxes, insurance, PMI, all of that good stuff. So all of that's taken care of here, which again leaves a nice 24% little buffer. Now we have repairs, which was 9% of my expenses. And honestly, that's a little too high. So we spent $5,800 on repairs. We spent $4,100 in utilities, and that's gonna go up this year for sure because I have the Duke uh, payment plan that like you pay the same amount every month, and then the following year it readjusts. So once it readjusts, that thing is going all the way up. Spent 3,300 on HOA, 1,092, almost 1,100 on supplies, and really the whole supplies is just when I don't feel like paying somebody else to do the job, and I'll go over and do it myself because I need to save money. Yeah, so I go and I buy that myself. Cleaning and maintenance, 4,000 or $444. I spent $335 in legal and professional fees. I think part of that was an appraisal that I had to do to remove a PMI from a separate property or one of the properties, so that it could the profit margins could go up. That was a great investment. And then nothing on advertising. I never advertise. You just post on Facebook Marketplace, and everything kind of works out. Really, Marketplace is the only platform that I use when I'm looking for tenants. I used to use, actually, Marketplace and Craigslist do very well. But yeah, so this is what it looks like behind the scenes for me. Like my dashboard right here, where I have all the rents that I collect, all the expenses, and when it comes out to it at the end of the year, I made a whopping $90. I'm so rich. Yeah, this is the stress that people don't see when they're in when they're thinking about getting into real estate. But again, so for me, it was just I made one bad investment, and I really like this property, and I really want to keep it. I want to try to fix it. I think I have an idea of how to fix it. Like I really think I could fix it, so I don't have to sell it. The tenants that I have, they're pretty cool right now. So having them there while the property still needs a lot of love right now really helps out because they're just really chill. I feel like other tenants might really lose their brain or like lose their mind and all that. But to be honest, all my tenants are pretty chill people. But but yeah, if ideally I could sell this one problem property, and then these numbers would look a whole lot better. But then I would probably be selling for less than what the property is worth, or I would have to spend a lot of money to fix the property up, get it painted, get it looking nice, and then try to sell it for market value. And then I would have to eat up the mortgage that I'd have to eat up the mortgage every month until it gets sold. And right now, inventory is moving pretty slow, so I would much rather keep it rented out if everybody's happy over there. And then maybe one day I'll turn that into like a business address because I've really been thinking that at the very worst, this property that I have, I can turn it into I could turn it into a storage. That's really like my whole idea. Instead of renting out a storage, I could just turn that property as a storage. The only problem is that the that property is my highest mortgage. I think the mortgage on that property is like $2,400. It went down a little bit towards the actually it went down a little bit this year. This year it went down a little bit. And yeah, and for the longest that property what the mortgage was actually almost $3,000. The mortgage was more, significantly more than the rents that were coming in. So I was taking a loss on the mortgage. I was taking a loss on the utilities because I rent that property out by the rooms and utilities included. And I was probably in the hole, if I remember correctly. I think I was in the hole, and this was for like probably a year and a half. Every month I was in the hole about 600 and something dollars. I'd have to come out of pocket 600 and something dollars just to maintain this property. And then on top of that is the repairs and the maintenance that don't stop. They really do not stop on this property. Sometimes I repair one thing and then it ends up getting messed up again. But this property is really teaching me a lot, so I'm kind of just in it for the experience. And since my financial situation, it got to a point where I was like really stressed out about it. But since my financial situation is not as bad as it was before, and I'm seeing, especially this really helps me understand what's going on. Since I'm seeing that the other properties that I have are actually able to pay for this property and still pay for all of these repairs, like these 3,000. So let's look here better. In repairs, we have 5,800, and then just add this 1,100 in cleaning and maintenance. Most of all of this, like over 90% of all of this stuff was for one property. Actually, we'll say like over 95, 96% of all of this was for the same property. The utilities is all for the same, it's all for the same property. So let's call repairs, as far as the damage that the house has and all the repairs that need to be made. We'll say it was $8,000, and it's all for this one house, plus $4,000 in utilities. That's $12,000, and then HOA. I think for that house in total, it might be like $400 for the year. I think it's like $400 for the year. So you're looking at 12,400, like $12,500 that this house is costing me. So just that's written. That's a fixed cost of owning this house is $12,500 every year. My other properties are still able to cover all of that, all of those expenses and utilities, and still net me $90. So technically, I'm not in the negative. So some people will say this is stupid. I completely get it. To be honest, I agree with them. I think this is really stupid, but um, I'm really hopeful, and I guess I'm in this more for the experience right now because I've had a lot of contractors go into that one house and they just don't know how to fix it. But if I can at least know how to fix it, then if I ever see that problem again, then I know I'll be good. Also, in this area, all these houses have the same issues. So if I can learn how to fix this one, this is really me thinking 10 years out, not even five, maybe like 10 years out. I can go and hopefully start buying up those properties in the area that people don't know how to fix. And there's been big companies that have bought properties in there, like big investment companies. Uh, and then they end up like after a couple of years getting rid of it because they're like, yo, these numbers are not making sense. They're probably looking at these same numbers that I'm looking, and they're like, these numbers do not make sense. Get out of the property, and then they'll even sell it for a loss. They'll fix it up and then sell it for less, just so they can just get out of this money pit, money trap that they're in. So if I can figure out exactly what it is that these properties need, so that um, they can be more viable properties, better performing assets. Oh my goodness, I think I would. This pain in the long term will be well worth it because then if I could buy up a lot of those properties in that neighborhood, I'm good. I'm golden. So I have some ideas. Um, I probably won't execute all of them this year, but at some point, I know I definitely will. And I'm gonna see if this property can actually be salvaged, and if I can fix it to the point where it could just be like a normal home, because it is not a normal home. Everybody in there complains about them. Like everybody in that neighborhood complains about these townhomes. And so the goal is to increase this profit margin. Hopefully this year could be a little more. I don't know. I'm not really focused too much on the whole real estate right now. I just want to make sure that I'm still in the positive with real estate as a whole. I know people look at properties individually. For me, I'm looking at all of this as a whole because even though I only made $90 profit, the principal still paid down, um, or a lot of the mortgage payments paid down the principal, so it increased equity. And then some of the properties, even though in Florida it's kind of been flat, some of the properties went have actually gone up in value. I think two of my properties have actually gone up in value, which is good. So that builds up equity. So even though it kind of looks like this is crappy, my net worth has actually gone up a little bit, not as much as it did back in the beginning of the decade, but it's gone up a little bit thanks to this. So as long as I'm not in the negative, we're still making progress towards that $1 million goal over here. So I think that's really everything that's in here. Yeah, yeah. This is the annual overview. So that's what the year looked like for me last year. A lot of work, a lot of headaches, all for $90 in total. But hopefully in the future, this will all work out and it will all be well worth it. But only time's gonna tell. So that's it for this video. Until next time, you guys have a good one.